All right, welcome back to this week's breakout watch list from November 7th to the 11th. In this video, I'll be covering the top 10 setups going into next week. Each of these stocks either have strong fundamentals, strong technicals, or strong volume patterns that lead uptrends. A big thanks to MarketSmith for sponsoring this video. MarketSmith is the trading research platform that we're going to be using to break down each of the setups. And finally, I want to hear from you guys. If there's a stock that makes your watch list but isn't covered in this video, drop it in the comment section along with your reasoning. Here are the 10 stocks that we'll be covering in this video, and keep in mind that each of these setups are from the long side. Now we're jumping to MarketSmith and breaking down the first stock, BTU. This is in the energy coal group, 56th strongest group out of 197. It has a 98 overall composite rating, along with a 99 individual relative strength rating. So very strong fundamentals, strong technicals. Speaking of technicals, the price is above the rising 200-day moving average, and then the 8-day EMA, the 21 EMA, and the 50-day simple moving average are all right around the same price, just under $25, and the low from Friday, which held as support. So we're seeing good price action, most recently with the stock jumping on earnings on Thursday. Earnings up 490%, sales up 98%, very strong there. Ideally for this setup, we would see market pressure continue going into next week and the stock pull into the $25 area along with the 8, the 21, and the 50-day moving averages. If market pressure is just relieving and we get a rally on Monday, look for a break over Friday's high, 27.47 as a potential entry point. But again, ideally, we do get the market pulling back so we can get a tighter entry point along with a stop loss under the 8, the 21, and the 50-day moving average. The next stock that we'll cover is CAR. This is Avis Budget Group. Not a very strong group. Leisure service, 125 out of 197. Very much a technical setup. As you can see looking to the left of this chart, it has the ability for these very strong breakouts, which as a swing trader helps us because we can put a 5% stop loss as we enter the trade and have some asymmetrical risk reward. Most recently on the chart, the stock broke above the 200-day moving average on above average volume, up about 16% this day, and then continued to rally as the market was rallying up here. Then had earnings last week. Earnings were up 102%, but sold off a little bit along with the market pressure coming in. Since then, Wednesday, Thursday, Friday, pretty tight price action along with an inside candle on Friday, really setting up this trade for the beginning of next week. So for this, looking for a break over Friday's high, 236.30 as a potential entry point, stop loss under Friday's low there for some nice tight risk management. Next, we have our first biotech stock, GILD. This stock had an earnings gap up about 13% on 255% the average daily volume on October 28th. Since then, the price has just traded sideways as the market is sold off, showing relative strength. You can see this blue relative strength line, basically vertical, which is awesome to see. The ideal entry point on this was kind of Friday as it broke over $80. But it's not too far extended, closed at $80.34. So if we do see market pressure continue, let's see how $80 holds or the low of Friday, which was $78.39. But somewhere getting the risk on at $80 and then keeping our stop below the low of Friday or as the 8-day EMA rises up for GILD. One thing that I noticed going through my weekly routine is how many building stocks, heavy building construction stocks, were hitting relative strength new highs or were up on above average volume. So I had to put one of those stocks on the watch list today, chose KBR. This group is working its way up the ranks, now 75th strongest out of 197, so it's a B group strength rating. 85 overall composite, 88 individual relative strength, but you can see the blue dot there. That means relative strength has hit a new high compared to the S&P 500. This is forming a nice pivot right around 50-50. Last 4 daily highs right around 50-50. $50.50. If the market pressure continues, we pull back to the 200-day moving average and get some valuable feedback to see if buying support comes in and supports the action around $49 there. If we do see that, then that 50-50 pivot increases our odds. Otherwise, if this just breaks to the downside, we'll give it some more time to set up. But really looking at that 50-50 area for KBR in a group that's starting to become more favorable. Next, we have NTNX, and this was a stock that I traded last week. I think I put this on the breakout watch list last week as well. I took the trade over $27, just a break over the previous day's high. Sold a third in strength and then a third as it came back into the pivot as the market was just selling off on the FOMC news. But this really hasn't done too much wrong, so I want to shift my attention back to it. Already had some profits the first time I traded it. It does tend to trade pretty orderly, which I like as a swing trader. As the market's been aggressively selling off this second half of last week, this pullback to the 8-day EMA undercut it a little bit, but closed right on it on Friday. and it did so on below average volume. And that's the type of volume action that we want to see. Heavy volume on the way up, then low volume as swing traders, short-term traders take their profit. But the long-term investors aren't liquidating positions on a move like that in the general index. So just looking for a pullback buy on this with a break over Friday's high, 27.43, NTNX. Back to biotech stocks, we have PCVX. This has had a ton of volume pouring in recently. Stock has gone from $20 up to $45 for over 100% gain. And now we're starting to see at least 4 candles where price is tightening up and volume is slowly getting below average now, which is nice to see, along with that 8-day EMA catching up. In a perfect world, we see market pressure continue in the first half of this week, and this stock continued just to flag out sideways, allowing that 8-day EMA to catch up for a potential stop loss under that area. But really looking at this $45 area on the strength of the stock and the strength of the market as a potential entry point. Lots of power in the name, but we do want to wait for a low risk entry point for PCVX. Now for a stock that I know was on the watch list last week, PI. This is a semiconductor stock, which that group is still unfavorable at this point, but had earnings 2 weeks ago, 950% earnings per share growth, sales up 51%. The stock popped up 29% on 620% the average daily volume. So very strong change in supply and demand there. Going to a weekly chart, you can see that this is hitting all-time highs, so no overhead resistance. There's not trapped sellers that's going to create selling pressure if we rally up to a higher price. The only people selling this stock is people selling for a profit, which is nice to see. Since that move up, it has really just traded sideways, bounced Friday right at the 8-day EMA, and then closed in the middle part of the range. One thing to point out Friday is while the indexes closed up like 1.5%, a lot of the growth stocks didn't have a very positive day, and the fact that this was up 0.6% does show some good relative strength compared to the other growth stocks that had been holding up well. For this, I would love to see price tighten out a little bit more, but then a break over Friday's high, 116.81, or if we can just zoom into a 15-minute chart or a 10-minute chart, how the stock handles around 115 is an area of interest to me as well for PI. The next 2 stocks are both going to be steel related. This one is RS, Reliance Steel. In the medical fabrication group, 24th out of 197, so A group strength rating, 93 earnings per share rating, B plus accumulation distribution, 97 composite, and 92 individual relative strength with a blue dot signaling a relative strength new high on Friday. All great to see there. As you can see, the chart, we're right near the previous highs here. Cleared 200 and held above that area, up 1.5, 1.6% on Friday. The stock does trade less than 500,000 shares a day, so if liquidity is going to be an issue for your account size, maybe this is one that you ignore and go to the next steel stock that we're going to talk about. But what I want to see here is if we see market pressure continue to the downside, does $200 hold? Does the 8-day EMA right around 198 hold? And with that pullback sitting on top of the previous resistance area, right around 199, that would be really nice to see as a swing trader. And then with that market pressure, we can get a lower entry point and keep our stop loss possibly under Thursday's low, right around 196 area there for RS. The next more liquid steel stock is STLD. This is specifically in steel producers, the 14th strongest group in the market. So 94 earnings per share, A plus group strength rating, B accumulation distribution, 98 composite, 97 relative strength rating. Just had earnings up 10%, sales up 11%. Really strong reaction to those earnings. Came up right to the previous highs, and now we're putting in a nice cup and handle here. Nice move on Friday at 4.2%. Ideally, we do get some more price tightening, and then we could use Friday's high, 96.34 as potential entry point. But if market pressure continues to relieve and we see the stock move up, then that Friday's high, 96.34, is a potential entry point for STLD. And last stock that we'll cover today is another biotech stock, UTHR. This one had earnings last week where earnings were up 18%, sales up 16%, after-tax profit margins up 46%. That biotech group is very strong, 9th out of 197, A plus group strength rating. This has an A minus accumulation distribution, 95 composite, which you don't typically see biotech stocks have strong fundamentals, but we are seeing this here with earnings per share, sales, and after-tax profit margins. Most recently, the stock broke into new highs through $250 on Wednesday, continued buying on Thursday, then an inside candle right near the top of the range on Friday, only down 0.3% after a really nice move from 233 all the way up to 270. Two areas to attack this one. If we pull back to this 245 area on continued market pressure, build out a handle to this area, that would be awesome. Otherwise, just kind of a tighter flag up here, holding 260 on any market pressure, and then we could buy with the break over the high from Thursday, 270.44. But ideally, we do see market pressure, price tightens up, we see some relative strength in the stock, and then we can get a lower entry point on UTHR. And those are going to be the stocks for the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and hit the like button and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. A big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the stocks, you guys can give it a try yourselves using the link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter and at Nick_Drendel on all the other sites. Have a great week, and I'll see you guys in the next video.